All right, so some news in the mortgage industry. It looks like Trump is proposing a 50-year mortgage option. That's something the White House is working on. Currently, the 30-year fixed mortgage is the most popular in the United States. And so here they are looking at making a change, so adding 20 years to that. I can understand the goal behind it. They want to make housing more affordable through lowering the monthly payment. And so it gives more opportunity for those who aren't in the housing market yet to get into it, having to pay less per month. But they're taking what would normally take 30 years, stretching it out over 50 years. And so does this make sense? Is this a good idea? Let's take a look at some of the math here. So I've got up on the screen, I've got a mortgage calculator. It's just a basic calculator here. I've got $300,000 purchase price, 5% down payment, which gives you a down payment of $15,000. I just threw in an interest rate of 6%. Doesn't really matter for the sake of this thing here. But that gives you a loan amount of $285,000, a monthly payment around $1,700. And with a 30-year mortgage, that's 360 payments, as you can see on there, where you're paying a total of $330,000 in interest, bringing that cost of the loan to $615,000 stretched out over 30 years. And when we do that, if you take a look at what your total annual payment is, I'm going to stretch this over here, that's $20,504 that you'll spend on your mortgage in the course of a year on your principal and interest. Let's go back over here. We're going to switch this to a 50-year option and see how these numbers change. So again, the down payment amount is the same, $15,000, interest rate's the same, loan amount is the same, but notice the monthly payment now has dropped down to $1,500. So you're saving a couple $100 there, but now you're making 600 payments instead of 360, and the total cost of that loan is $900,000. And so that's a significant increase in how much you are paying in interest on that loan. And then if you look at your total annual payment, now you're at $18,000. So essentially, you're saving yourself about $2,500 a year, but you're stretching your mortgage payment out over 20 years and increasing the interest paid about $300,000. So who really comes ahead on this? To me, it looks like it would be the banks and the lenders that are certainly getting more out of this than the home buyer. But what do you think? Is a 50-year mortgage a good idea, or is this a bad idea? Comment below and let me know your thoughts.